You ultimately become a victim of your own success.
It is a national emergency. Strengthening fraud controls.
There's a bit of an obsession with the word perpetual KYC at the moment.
Every company wants to grow, right? But it would be paradoxical to think that you're going to grow whilst also eating into your risk appetite. Always check the URL, always check terms and service or policy.
And listen to What the Fraud as well.
Hello and welcome back to What the Fraud, a podcast by sumsUb where digital fraudsters meet their match. I'm Thomas Traniak, currently responsible for some of our very exciting partnerships here at sumsUb, the digital verification platform helping to verify users, businesses, and of course, transactions as well. We hope you're enjoying the new series of What the Fraud thus far. I've already had fascinating chats with threat intelligence specialists, as well as a former policeman who is now fighting crypto crime. So check them out if you haven't already on YouTube, Spotify, Apple Podcasts, and more. So here's a shocking stat to begin today's episode. According to UK Finance, criminals in the UK in 2023, in fact, stole over 459.7 million British pounds. And this threat continues to go on the rise. So today we're going to break down why these scams have exploded, the ongoing challenges in stopping them, and how businesses and users protect themselves against the growing threat. We'll dive into a recent example of Revolut highlighting the vulnerabilities for top fintech firms. We're also taking a closer look at the new UK reimbursement rules set to be enforced by October 2024, which shift liability to payment providers. We're also comparing them to similar regulations in other countries, such as the US, where similar regulations are under debate. But first, let me introduce you to our brilliant guest, a seasoned expert in fintech fraud, James Nurse. James began his career in a fast-paced online gambling industry where he tackled fraud, KYC, and payment challenges head-on. From there, he moved to scale operations at a startup bank and later worked on a group-level financial crime framework at a major financial institution. Now, as a managing director at FINTRAIL, a financial crime compliance consultancy, James and his team help businesses build robust fraud control frameworks as well as financial crime programs with a current focus on assurance reviews and fraud audits in fintech. So, James, welcome to What the Fraud.
Thanks so much for having me.
So, to begin our episode together, James, you've had the opportunity to work with a range of businesses, right? Can you share what type of businesses you typically work with and what the common challenges they face when it comes to financial crime?
Sure. So traditionally, we've worked with, I guess, that broad brush statement of fintech, although we do work with a variety of kind of traditional financial institutions as well. But it's anything from crypto businesses to challenger banks to FX businesses to lending firms, capital markets, wealth management, anything kind of that, or an alternative finance method. And the challenges usually kind of relate to either the nicheness of the kind of financial crime threats that they face, because obviously if you offer card products, lending products, access to faster payments, they have some kind of nuances against them. But obviously as a wider piece, businesses are still need to be compliant to the kind of local legislations that they are kind of need to meet, whether it's the FCA, whether it's FinCEN or whatever country you kind of operate in.
Thank you, James. So APP fraud, otherwise known as authorized push payment fraud, is when a victim is tricked into sending money to a fraudster. And this is a massive one. I mean, it's rife across the UK with 1 in 3 consumers falling victim and over half saying it's getting harder to spot the signs. So to even add to the issue, James, only 25% or 1/4 of APP fraud and scams are detected by a victim's bank. So in your expertise or your light of experience, why do you think APP fraud has become such a big issue recently in the last year or even beyond? And what would you say has changed to cause such a surge?
We're talking about a couple of things. There's the lag in us actually doing something about it. This is not anything new necessarily. If you look back to when the original witch super complaint that came in 2016 or something, that in itself, is kind of 8 years ago now, nearly 9 years ago. So it's not necessarily anything new. But I think where we're seeing it being amplified and being more in the limelight is obviously the fact that the incentives have been created over the last kind of 3, 4, 5 years with the kind of PES payment system regulator putting the new reimbursement kind of model in. But also we're looking at things like the rise of social media platforms continuously being the rise of kind of alternative payment methods, the rise of money mules as a vehicle to move to be used for, authorized push payment fraud, and just generally criminals being kind of very kind of innovative in their approaches.
Okay. Well, based on our experience as well, behavior analysis and, even now today, AI-powered anomaly detection help a lot with spotting this type of fraud, or at least the signs for different fraud schemes. And from your experience, I mean, you've worked in both small banks, right, startups, as well as large corporations where you're developing these frameworks. But what works best in detecting these schemes from your experience?
So I think when we talk about detecting, that goes back to that classic prevention and detection principle that you're often looking at, generally on financial crime, not just fraud necessarily. Obviously, the more you can stop in from an onboarding perspective is always the best thing. If you can stop them getting in and onboarding with you as a business, that is always the best approach. Often when people talk about APP fraud, they think because it's related to a transaction, that means that's the most important part of the customer journey. But actually, ensuring you have proportionate controls throughout the life cycle of the customer journey with you is equally as important. So, not neglecting onboarding, and obviously, making sure you have the proportionate detection requirements when looking at transactions as well.
That definitely makes sense. From our perspective as well, we've always seen the origination point just being the first touch point, right? And after the fact, around 60 to 70% of a lot of the fraud that we see happens. But we've also recently seen that banks, as well as service providers like MasterCard, actually roll out these AI-driven tools that scan the transaction histories for suspicious activity, with confirmation of payee being implemented by, let's say, October 24, I believe. The payment details are being double-checked now. Do you think these measures are enough to actually tackle the APP fraud that we've seen previously?
I think it's about not being reliant on one area. Like I think it's bringing up confirmation of payee is a really, really good example. If you look at some of the the open consultation that we've got at the moment on delaying payments as well, there's like a whole variety of areas that kind of bring the big picture, and meaning that you're not solely reliant on one particular control area to basically prevent it. And I think stronger customer authentication or confirmation of payee and all those kind of areas all contributes as well.
Definitely, and we need all of these organisations, all of these banks.
Absolutely.
Now, I think it would be great if we could move on to today's case study. And of course, we'll be talking about what everyone's talking about, Revolut, who, of course, our entire audience must know, a prominent UK fintech company who are facing a 35% increase in fraud-related complaints during the second half of 2023. I mean, the Financial Ombudsman Service, or the FOS, had to actually intervene and manage these reimbursement claims after Revolut initially rejected thousands of customer requests for compensation. So my question to you, James, is why do you think so many customers are still turning to the FOS? And is there an actual gap in their fraud prevention strategy?
I think there's a few things at play here. I think the general consumer is more aware that they are potentially able to kind of get reimbursed for scams than maybe they ever used to be. And I think, they are being pushed towards the ombudsman, as they always had, as a last resort. I think more people are being scammed. It is, that is, clearly one area. But when we talk specifically about the Revolut case, I think there's a couple of context bits that are important to take into consideration when we're talking about that, the growth that they're seeing. I think I read that Revolut have added 7 million customers on their books over the last kind of year or something, which is something like a 18% growth or something like that. So if you look at that, and the other kind of retail high streets kind of banks are not nearly adding that amount of customers to their kind of their client list over the last kind of 12 months in comparison. So what we're seeing is proportionality to a certain degree. That's not to say that they can't necessarily increase their control area, and it sounds like they are adding significant investment into that kind of their fraud control framework as well. But ultimately, there's an element of proportionality and that you need to consider there as well.
Agreed, James. But not long ago, Revolut actually received a UK banking license, right? It's all over the news, and they're looking at, after a 3-year wait, moving forward with that banking license. But does that actually mean they're being protected well enough? And is that the case for other fintechs in the UK and beyond?
So I guess let's be quite clear here. The protection, when we talk about protection, it's about protecting the ecosystem and protecting the consumer. That's where most of the protection, when we talk about, come from. So clearly by providing them a banking license, clearly, the FCA thinks they are ready to receive that banking license ultimately, and they would not have necessarily accepted them unless they thought they were, ultimately ready.
Absolutely. At the end of the day, this is to protect the user base, or let's say the actual general public, right? Millions of users of Revolut. I think it's around 35 million now. And UK policymakers, specifically for the Revolut users and other banking users in the UK, are making plans to introduce more rules requiring banks and fintechs to reimburse scam victims. So, I mean, though the industry opposes these costs, this is a clear signal from regulators for regulated industries to invest more in anti-fraud and also protect their customers. So UK policymakers now actually plan to introduce rules requiring banks and fintechs to reimburse scam victims, though, of course, the industry opposes these costs. So is this a clear signal from regulators for the regulated industries that we've discussed to invest more in anti-fraud and protect their customers? I mean, from the perspective that we're looking at here, James, they are now liable to reimburse up to £85,000 lost to fraud or in fraud. Would you be able to explain that a bit better for me?
Yeah, absolutely. So ultimately, it's a shared cost that's coming into kind of play. So the payer and the payee, or the sender and the receiver, will ultimately be liable for 50% of those potential kind of amounts. There is a recent consultation that has closed over the last week or so that has lowered that limit from, I think it was 415,000 or something, down to the 85,000 limit that we're looking at right now. So that is the maximum amount that a firm could be liable for, and through that reimbursement.
So from your perspective, what would you say is the biggest reasoning behind this change in cap?
I think there was an element of industry feedback. So I think, the payment system regulator, and any kind of, authority that does consultations, we're not limited to just the UK here. They do consultations because they want industry feedback. There was an element of lobbying against that limit as well. So I think, there's a whole variety of things. They went for consultation after kind of industry feedback. The formal industry feedback through the consultation was that it was too high. So now it has been reduced.
So how will this new cap actually affect both providers and large loss cases?
So ultimately, those that are unable to kind of prevent these types of scams that are going through them on a sending or receiving basis will be liable to pay if they can't kind of prove the exemptions. And the exemptions are basically gross negligence, which is a really tricky one to prove, or that the client was acting fraudulently. So there's a couple of exemptions there, but ultimately they will be liable to pay the consumer or the person that has been scammed that amount if they're not able to approve those two exemptions within, I think it's 5 working days.
Okay, that makes a lot of sense now. So, James, can you draw any similarities to what actually happened in the US last year with Coinbase?
So I guess the point on Coinbase is and it's about uber growth companies where they have gone through significant growth in such a short period of time. It is extremely difficult to kind of prepare for those kind of exceptional growth where you're taking on thousands, tens of thousands sometimes of customers on a daily basis. And I think, if you look at the Coinbase fine from last year, whilst it wasn't necessarily related to fraud, actually the similarities in growth and how you kind of proportionally grow your financial crime and fraud framework with the growth of the company, is really, really important, but ultimately also really, really tricky and really difficult to prepare for. And you ultimately become a victim of your own success because you're doing really well as a business and you're scrambling around to try and make sure your kind of compliance areas can keep up.
Would you say it's part and parcel, these large organizations growing so quickly, to actually be attached to these types of frauds? And also, is there a way to get away from it, or is it just part of the natural life cycle of going through the processes?
I think there's an element it's being in the natural life cycle, like it's about maturity. You can't always have maturity at day dot. You learn, like and the kind of traditional businesses are still learning. HSBC are still seeing kind of illicit money going through from various kind of businesses. I think, no one's exempt for these things, but I think particularly with some of these uber growth businesses, it's about maturity.
There's an element of this sort of, these types of fraud that you kind of get away from as a large organization. But when you're talking about, as you said, Day Dot, an organization which has just been, post-startup, and then they've just raised, and they've now gone after 2 years to 10 million customers, having the right frameworks in place, the ones that you've built previously, is essential. But is it enough to actually stop these types of fraud from the get-go? Or are there other elements at play?
I think, whenever we as FINTRAIL sit down and do projects around risk appetite, I guess is what I'll call it, you are never, whilst you obviously want to prevent all fraud or all financial crime happening on your system or through your payments or through your accounts that you hold, ultimately, you're never going to set a risk appetite, which is zero. You have a low or no tolerance, maybe, but you also accept that ultimately, you're going to see some form of financial crime through your kind of through your accounts or through your payments. It's an inevitability to a certain degree, but it's about making sure you kind of keep it kind of below your tolerance thresholds and the regulators' tolerance thresholds as well.
Absolutely. I mean, every company wants to grow, right? But it would be paradoxical to think that you're going to grow whilst also eating into your risk appetite.
Yeah, absolutely. And ultimately, we could put 1,000 controls in place, but ultimately for the consumer, you would not be getting quick payments. You would not be getting quick bank accounts. You would be, restricted from access from accounts. So it's about how we get the right balance as an industry to make sure, it's accessible to everyone, the ecosystem. We have, good service for the kind of industry as well, but also we're protecting the consumer at the same time. And unfortunately, the trade-offs don't always pair well together.
Absolutely. And what does the day-to-day consumer, do you think, need to know, especially around these types of frauds, to remain vigilant, etc.? Because we're talking about a lot of the back end or back office things that we would sort out, the KYC from the origination to the ongoing monitoring, but also the regulations. But if the actual user applicant or let's say app user is actually fully in control, is there anything that they can actually do to stop these types of fraud that we're talking about?
I think just educate yourself. I appreciate that there's an element of legacy there, where we've obviously got vulnerable customers that can be more tricky and difficult to educate. But equally, someone like myself, you can easily pick up a text and suddenly think, oh, that's from DPD or someone like that, or someone else, and you're about to click on it, but then you realize, oh, actually it's like a scam or something. So it's so easy to do, but just keep educating yourself, keep on top of things, and keep reading any kind of pieces your banks or your other financial institutions kind of push out to you.
Absolutely. And listen to What the Fraud as well, of course.
And listen to What the Fraud as well.
I would say even with DPD, that was a really interesting one that you just mentioned, because I got one of those, I believe it was Saturday, but I'd in conjunction actually ordered something from abroad. So I don't know if that was by coincidence or it happened by chance, but I did click the link and I didn't proceed onwards because I did check the URL. But that's something that you'd always need to remain vigilant for anyone listening. Always check the URL, always check terms and service or policy, make sure everything is completely fine.
Absolutely.
Yeah. Even from Revolut's standpoint, I know we keep touching on them, but one of their executives, actually, Francesca Carlesi, has actually said it is a national emergency. Strengthening fraud controls and online fraud controls is indeed that. I mean, what role will this play in mitigating future scams, and how can they meet the rising sophistication of online fraudsters as well?
I think if you've joined any of the payment system regulators' external speeches, or you've listened to read any of the write-ups that they've done, or any of the documentation around the reimbursement kind of model, obviously not everyone loves it, but I think they have. It's about mentioning the same thing over and over again, creating the right incentives for the kind of industry to ultimately do the right thing. So at FINTRAIL, we've worked with a variety of different businesses over the last 12 months and beyond, mainly doing like assurance reviews around their control frameworks, specifically regarding fraud. And if you look at the kind of numbers in those firms that maybe we've audited from where they were maybe 2 years ago, you can see their fraud rates that have rapidly decreased over the last kind of couple of years from where they were. So when we talk about creating the right incentives, clearly it is working.
Fantastic. And with these schemes as well, do you think they're in place for for protecting users in the next 1 to 2 years, or is this gonna take an overall challenge of what we're seeing with other types of fraud over the next decade or so?
Yeah, I think when we talk about types of fraud, we often get confused. As well, like authorized push payment fraud, we have to remember covers a whole variety of like scams, which ultimately are the same thing. Whether it's we talk about romance scam, we talk about the classic building a school scam, like investment scam, loan fees, advance fees, scams as well. Or lost pets, another one as well. If anyone's kind of looked at those ones as well, like they all cover like authorized push payment fraud. So I think, and the principle's the same. It's just conning the individual for paying for something that they think they're getting, and ultimately, like, it does not exist. It was a fake kind of scheme in the end. So I think principally it's the same.
Principally, the end user's losing money, and these
Yes.
regulators are here to protect that, and that's what's important, of course. So thank you very much, James, for your answer there. And we'll be right back after a quick look at what's going on behind the scenes at sumsUb. Fraud prevention isn't just a one-time effort. It requires regular attention. And that's why I want to highlight something crucial for our audience today. And according to our internal readings and reportings, over 70% of fraud occurs after a user has been verified. Think about that. If you might be actually letting fraudsters in during the onboarding, what happens after they're in? This is where sumsUb's transaction monitoring comes into play, tracking financial and behavioral data such as, let's say, withdrawals, deposits, receiving and sending money, password changes, transaction history, and of course, so much more. Even seemingly legitimate users can suddenly begin fraudulent activity. And this is where one-time checks at the onboarding just doesn't cut it anymore. These kinds of tools can, of course, help to catch suspicious activity and prevent companies from fraud and money laundering. You'll find all of the details on our website, sumsub.com, and in the description of this episode. So right back to today's guest, heading up one of the UK's leading consultancies fighting financial crime, James Nurse. Welcome back. So James, we often talk about the fact that KYC, otherwise known as Know Your Customer, is not enough, and only full cycle verification can be a solution to anti-fraud today. So in your humble opinion, how important is it to monitor users in fintech?
Yeah, absolutely. And that, as you kind of alluded to, that full cycle approach, there's a bit of an obsession with the word perpetual KYC at the moment. So I'm sure, you as a
PKYC,
team,
yeah.
PKYC, it's already been simplified already. So, and, making sure that you ultimately kind of have a good understanding of your customer through the life cycle of your journey. So I absolutely agree with you there. I think, particularly around the topic that we're talking around as well, like things come into play, like dormancy or inactive accounts, and changing customer behavior, and changing customer ownerships, and changing a whole variety of areas that you're not going to know unless you monitor that ongoing kind of concepts with your customer.
Absolutely, and there'll be different risk triggers based on different interactions, right? Whether or not it's frequency or volume. But from your perspective, James, as well, how do the new rules shift the financial liability, let's say, for APP frauds, scams from the customers to the actual payment service providers?
Yeah, it exactly does. It does I think that's one of the concerns as well, particularly in the fintech industry, where there's an argument on affordability, whether especially when these businesses are kind of operating off funding rather than profitability.
Yes.
Where ultimately, pushing too much onto the kind of the payee and payer side of things, and not putting enough onus on the consumer, ultimately may result in some additional kind of, well, we call them unexpected consequences. So I actually posted about this a little while ago on LinkedIn about some of the unexpected consequences that might come off the back of kind of this. So things like, more kind of firms going bust, the increase in friendly fraud, like there's a whole range of areas that, pushing too far away from the consumer, because in my opinion, there still needs to be an element of responsibility on the consumer to look after themselves. It's about getting the balance ultimately.
How do you think the UK regulations compare to the approach that's being taken in different markets, such as the US and Australia too?
Certainly. So I think, the UK is the more progressive market on this particular area.
Yeah.
I think there's a variety of different progressions across the board in some of those countries. I think I understand the US are, certainly exploring it, but they are looking at it. They have basically a voluntary reimbursement scheme, I think, in the moment, where it's the kind of approach that we were looking at in the UK before, where you do not have to reimburse, you do not have to sign up to the scheme. It's a voluntary one. But I think, and similar to Australia are also kind of doing a whole range. They've also kind of going on the journey, not dissimilar to kind of the UK. They've got a lot of other initiatives, not just around reimbursement that they're looking at. But I think, one of the bits they are looking, or the Treasury is looking at the moment, is kind of a similar mandatory reimbursement kind of model that we're adopting in the UK as well. We've also got kind of PSD 2.5 or
It's coming soon, isn't it?
PSD 3 or whatever you want to call it. That's also coming into play, and a big focus around that is also fraud and protecting the consumer around a few different areas. But one of them is around kind of what reimbursement considerations we need to be thinking about as well. MAS in Singapore are also doing something as well on, shared responsibility framework, I think they call it. So again, maybe a kind of dual kind of reimbursement scheme. So basically, to answer your question in short, there's a lot of countries that are following a similar kind of approach.
James, of course, I know that you're busy at FINTRAIL providing all types of resources and insights to help businesses and individuals combat fraud in fintech. But could you please share a sneak peek of what you'll be publishing and where to find it for our audience's sake?
Absolutely. So if you don't follow me or us on FINTRAIL, so we're on LinkedIn, you'll be find us very easily, or, fintrail.com obviously as well. We do quite a few kind of practical resources. We have a fraud checklist actually as well on the website. So, do feel free to have a look at that. And, there might be some kind of little bits if you're, if you're not looking at consulting an external party to look at your fraud controls, that checklist might maybe help kind of tick some of those boxes to see if you're doing the right things or you're on the right lines. So, but yeah, do connect, do follow us. We'd love to hear from you.
Does sound fascinating, James. We also have I believe, an event that we're doing together, right? Would you be able to tell our audience a little bit more about that?
Absolutely, yeah. So Econ 2025 is returning. We had a gap year this year, but we're really pleased to kind of to do our seventh conference. So this will be in February next year. We're also really pleased that the sumsUb team will be joining us for the day. So tickets are now live. So if you want to join, do sign up. We're looking forward to getting 400 or 500 people in the room, having a chat, listening to some good content.
Incredible, James. Well, I don't have my ticket yet. So where would people like myself who want to join actually go and get their ticket?
Yours is in the post, so don't worry.
Oh, fantastic.
But yeah, if you go to the FINTRAIL website, www.fintrail.com, and you just click on Econ 25, you'll be able to find the link there.
Wonderful. Thank you, James. Whilst we have looked through quite a few questions today, I'd like to kind of switch things up. We like to call them rapid fire, quick fire, and it's a great way to wrap up the show. So without further ado, just remember, no overthinking. Let's go, James. When choosing a crypto wallet, do you go for more features or better security?
Better security.
Wonderful. Number 2, strong passwords or biometric authentication?
Biometric authentication, or technically a blurred. I'll take a shot for that because I think it's both, right?
Is online fraud in crypto more about technology flaws or human error?
Human error.
What one habit would you say you rely on to stay safe online?
change my passwords, making sure they're in a password vault or things like that. Like trying to remove yourself and close as many accounts as possible. All that usual stuff.
If you could have any other career other than the one that you're currently in, what would it be?
Wow. Yeah. I always want to be a chef. It's probably more stressful, I think, being a chef, but I fancy being a chef.
I think being a chef would be very stressful. I don't think you could switch off. It would ruin actually cooking for myself, but...
But the hours are similar. Consultancy hours and chef hours are probably similar, so...
I can imagine. Thank you so much, James, for joining What the Fraud. It's been a pleasure to have you. Very much looking forward to Econ.
Thanks so much for having me. Yeah, speak to you all soon. Thanks so much.
So as we draw to a close in the podcast today, I would like to summarize some of the most interesting points that I've found. So fraud, of course, is part and parcel with the incredible and exponential growth that we're seeing at companies such as Coinbase and also, of course, Revolut. But with these startups, we're also seeing the regulators putting in a lot of emphasis around future regulations, which are going to set a precedent for the future of payment safety in the UK and the US as well, but also as an indicator to other regions of what's to come, like the US, of course, who is ahead. So these robust frameworks are working from what James has shared, but a lot of work needs to be done on the frequency of these types of frauds, as the monetary value is instead no longer a huge issue, beyond the occasional blip that, of course, we all see on the Daily Mail. But what I'd like to touch on at the end here, APP fraud, whilst a great acronym, covers a myriad of different types of fraud, and not only in the UK. So what James has kindly shared in this episode is something as part of the whole topic with what we do here at What the Fraud is education, making sure that you are understanding these types of fraud and you are aware of how to stop yourself from being the victim. Thank you for tuning in to this episode of What the Fraud. If you're loving the show and finding it as eye-opening as myself and the rest of the team are, please don't forget to hit the follow button on your favorite podcast platform. And that could be YouTube, it could be Spotify, and it could be Apple Music and so much more. So whilst you're at it, drop in a review. We'd love to hear your thoughts. So are you ready to elevate your business game? Discover how sumsUb's verification services can supercharge your success. So whilst we're thinking of that, visit our website for more, and don't forget to follow us on social media for the latest updates and insights.